So let's talk about what it means to be taxed as an S corporation and the rules of the IRS. So the way that it works is, as a shareholder in an S corporation, you're required to take a reasonable salary. And basically that means if you had to hire someone to do exactly what you're doing, what's the reasonable market for that person? And there's a lot of factors that drive that. So how much time the person spends in the business, type of skills and other things that are required of this person. Let's just say that a reasonable salary for the job that you do is $60,000. In your new LLC taxed as an S Corp or new S Corporation, you would have $60,000 thereabouts of pass-through income, which would not get hit with self-employment tax. The $60,000 of payroll that you're going to run for yourself will get hit with payroll taxes, which is synonymous to self-employment taxes. So basically you end up saving $60,000 times approximately 15% in payroll taxes. That does add up. Now, the bigger you get, the higher your reasonable compensation. You may not have those same level of benefits, but there are some other taxes that you would save on by making that move. The other main benefit you're getting by making this S election is that the IRS audits Schedule C businesses significantly more than they audit partnerships, S corporations, and corporations. By making that move, you're saving yourself the potential for an audit to the tune of 5 to 1. So the IRS audits 5 times more Schedule C businesses than they audit S corporations. So it's definitely a good idea to make the move. Once again, consult your accountant or CPA to make sure this decision is right for you. So let's talk about one of the most common questions that I get, and that's, when should I make the S election, or should I become an S corporation? How does that all work? So our general rule that we look at, I will say you should definitely consult your CPA or accountant on when you should make the S election. So our general rule is between $60,000 and $80,000 of net income for your business is the point at which you should consider making the S election. And as far as an LLC versus an S corporation, that's a decision that we usually like to bounce off the attorney, because different states have different rules, and in some states it's more favorable to be a true corporation taxed as an S corp, and in other states it's beneficial to be an LLC taxed as an S corp.